with Melissa Rodriguez. Melissa is joining us for the first time on the show. She's been a preferred loan officer in my business for a while and just became the branch manager at Citywide Home Mortgage, which I know you're really excited about. We're excited to have her. She's done a great job. They're our exclusive lender on our real estate team. It's interesting because how the connection started was my girlfriend, who works for a construction home builder, prior to that was working for a real estate team because we just decided, like, we'll be in the same industry, but we're not going to commingle that.
Right.
We're not going to be in the same business together. And so she had told me, she's like, there's this loan officer that I really like. She's really good. And one of the things I love about Jess is that she can read through people's BS. Like, she is really good at pointing out good people.
Right.
Like, she has an instant character bond, and she's a good person. So that's how it started. And you'd done a good job as an LO. And then I got the introduction to you, and then we had talked a couple of times. And so now here we are today, and we've got this opportunity with Citywide Home Mortgage where, who's owned by Guaranteed Rate, has an incredible platform. And you're, the branch manager, which is operating out of my building. It just kind of all came together, right? It was a great synergy, and my team loves you. They're definitely bought in. They're driving stuff to you, and super competitive on rates and fees, which I think is really valuable. But let's talk about mortgage rates, because I think there's a lot of misconception out there, right? Like, people think, oh, the Fed rate's going to come down, and then rates are just going to pile downward.
Right.
It doesn't happen like that.
So first and foremost, thank you so much for having me on. I'm excited to be here. Exactly like you said, it's great to stay in touch with the Fed rates and watch Jerome Powell, his talks he's going to be on in September. But that doesn't mean that the mortgage rates are going to come down.
Right. It's a pendulum. So for example, he may announce there's a 25 basis point cut, but most of the market is already predicting that will happen, and it's already pricing it in, right?
Right.
Rates have already softened to the point where most of that 25 basis point for mortgage rates, because what the Fed rate really is, it's more the short-term thing. The Treasury yields and bonds are what really dictate mortgages.
Right.
And there is a trickle effect where, if we continue down this path of lowering the Fed rate, where eventually you would expect that it should, for all intents and purposes, pull down mortgage rates, but it's not a guaranteed lock. It's not a guarantee. So where it will immediately affect you is probably credit cards, lines of credit, those fluctuating things. It'll pretty instantly hit there, but certainly some of it gets priced in now. If he did a 50 basis point cut, because that's not expected, then you might see some really quick drop in rates because the market wasn't expecting that.
Correct. It's just a good way to see how the market is doing, how it's trending. And you would assume, like you said, that the mortgage rates should follow.
Yeah. And I think a lot of people watch it, don't quite understand that. And what we have seen, long-term mortgage rates have hit 10-month low, hovering in the mid-sixes, kind of back and forth, and they do fluctuate. I want you to talk on that for a second, because I think that's one of the really nice parts about being in a broker model, which is what we have with Citywide, is that you have the ability to kind of forecast and see what's going on with rates to help educate people on whether they should or shouldn't lock, depending on what's happening economically that day. Right? There's people all the time where they're like, oh, and you're like, oh, maybe we should wait till tomorrow, because them locking that rate a day or two different before or after could mean a substantial difference in their interest rate.
Up or down.
Yeah, up or down.
Yeah, we really have to just watch it and communicate with our clients and just educate them on how the market's doing, how the rates are.
That's one thing that I think, again, the other thing about the broker model that I really like, which is why I was an advocate for it in my business, is no different than insurance, mortgage, a real estate brokerage. When you're not only offering a small segment of products, right? You guys have an array of products, like thousands of different products available depending on down payment opportunity, whether it's FHA, VA, conventional, whether it's USDA, right? Which is one of the unsung heroes. Not a lot of people know about it in our market because it's a no money down mortgage. You can, there are still no money down VA and USDA, some of the best mortgages out there, simply because the rates are still super competitive, but you don't have to come out of pocket.
Right. We have options, definitely some amazing options to offer our first-time home buyers, repeat buyers. We're nationwide, so we just have so many avenues that we can
and
check out.
that's the other thing. We are a company that moves people, right? So we'll have someone that's selling here and buying somewhere else. And I think they're so used to like their mortgage lender being like, oh, they can only help me locally. While you are local, they're selling in Tampa and they're going to buy in Arizona. We can help them on the mortgage
Right.
going out to Arizona, right? A lot less limitations on that. Other products like, jumbo. Right. Jumbo is something that's common in our marketplace. That's available. There's, different construction products. There's doctor loans. There's, bank statement loans for people. Like I have a personal friend that did a loan with you last year that was basically, it was an asset loan. You didn't have to go through as many hoops to jump through because pretty solid, right?
No tax returns, no pay stubs, just strictly bank statements.
Yep. And so that can definitely happen. A lot of creative things. I think one other thing on the mortgage piece that some people miss, one is down payment. There's still this myth out there, a misconception that you have to have 20% down. And while there's a lot of financial advisors, and if you're a Dave Ramsey guy, he's one of those guys that's, and look, I grew up kind of loving Dave Ramsey. And then I got to a point where I was like, well, this doesn't make sense. A lot of his stuff does, some of it doesn't. There's this belief that you got to have 20% down and it's just not reality.
No, I was just having that conversation with a client yesterday and they were like, well, we have 20% down. I'm like, well, do you want to put 20% down? Because if you're for conventional, first-time home buyer is 3% down minimum for conventional, and repeat is a minimum of 5%.
Right. So it's like you have the ability to take that cash and do something else with it or invest in the property or do whatever. Should some people put 20% down? I mean, it's a personal choice. There are people that are just, it's ingrained in them and they feel like that's what they need to do. But there are plenty of options out there. And we talked about the no down payment loans, which are VA and USDA. FHA is 3.5%. Down. And there's even conventional now that's competing with that. Yeah, 3% conventional.
For primary resident.
Right.
First-time home buyers.
Right. There's all these products that are available. And, one of my favorite loans, I'm a son of a veteran. My brother's a veteran. Like I'm an American patriot, go Army, kind of guy. One of my favorite loans is the VA loan. And I think that, and I'm sure you've probably experienced this too, the VA loan's an incredible loan product. Not only is it no money down, you can lump in all the costs. It is an incredible loan product.
Right. I love that too. And just being right there by MacDill Air Force Base, I love helping the veterans. Like you said, it's no money down. A lot of them are disabled. They don't pay property taxes.
Yep.
So we can help them with all of that.
Yeah. And I think that's one of my favorite loan products. And you know what? There's a stigma. And it frustrates me sometimes because there's a lot of real estate agents that group in the VA with FHA. Right. Like, oh, if it's VA or FHA, we don't want to, because sometimes the condition requirements can be a little bit challenging, probably more so for FHA. But one of the unsung heroes for VA loans is an easier ability to handle appraisal disputes. Like, for example, if a property doesn't appraise, you have the ability to go back and forth instead of it just being like, oh, it didn't appraise, right? So I really love the VA loan product for that. And I think in general, whenever I've been a listing agent and I've got multiple people and it's really close and there's somebody that's VA, I'm actually leaning towards the VA person in terms of my recommendation or in a property that I own, simply because I like that extra ability to overcome that obstacle on appraisal. But I also just think it's the right thing to do. Like somebody fought for our country. They sacrificed, like, let's go here. But I'm sure you've dealt with this before when you've qualified somebody on a VA loan and then clients having a hard time getting offers accepted because real estate agents aren't educated on the pros and cons of the loans. They just group the government loans in.
And they're just so scared. They're scared that they're going to tear apart the appraisal or the property. And it's not like that at all.
No, not at all. And so, again, Melissa has done a ton of VA loans. We are literally right outside the gates of MacDill Air Force Base. So if you're listening, if you're on base, if you're a soldier, if you're a veteran, if you're a contractors, most military contractors were in prior to becoming a contractor. And then some of those also still do qualify for VA. So again, you can stop by our office, 6320 South Del Mabry. Literally, you drive by. If you go on base and use Del Mabry, you're going by my office twice a day. So stop by. You can certainly get some help with qualifying with different loan products that are available. And now we have Hometown Heroes program is back in a small way. Kind of touch on that a little bit on what Hometown Heroes is, who can qualify, what that means.
Okay, so it has changed a little bit this year. Last year, it was open to all full-time Florida employees. This year, it's changed. So now it's true heroes.
People that work for the government.
Correct. Medical,
It's police.
Court officials.
Court officials.
Right. medical. And so teachers, the veterans can even do a hometown hero as well. But so it's 5% of the loan amount, up to $35,000.
Yep. Which is pretty awesome. And that gets basically, that reduces their out of pocket by getting a grant. Is that how it works? Is it, remind me again, because I'm not sure of the specifics on it.
So it does have to be paid back if you sell or refinance the house, but there's no interest collected. There's no monthly mortgage payments.
Okay, that's awesome. So it's basically just like a
correct
interest-free loan to reduce down payment amount for somebody to be able to help them qualify and technically lower their payment without having to come out of pocket the actual money.
Correct. So if you have, let's say, an FHA, that's 3.5% down. So you have the difference of the 5%. You could use it towards closing costs.
That's
as well.
pretty awesome. Yeah. Did, like you said, they did restrict it down. They did make it. So heroes, it's going to be, like she said, medical, military, police, teachers, firefighters, paramedics, military. That's kind of the group of people. Think of, kind of public servants, people that are going above and beyond to help. So that's not to say that there aren't people out there in other industries that are heroes, but Governor DeSantis and the state of Florida decided to kind of round this out and say these are our heroes. So